Welcome to my regular look at WTI crude oil and where that price is heading next. At the moment, it's in a bit of no man's land. It's playing games with us. It doesn't know which way to go. It's been pushed and pulled from pillar to post. And in this video, hopefully I'm going to untangle the mess and see where it is heading off to next. Going to look at some fundamentals, some sentiment and the charts, like I say, to untangle the web and see where it's off to. So with that, let's get on with the analysis. As regular viewers are aware, I like to use the Baker Hughes rig count to get a feel for the energy sector as a whole. Just tracking those numbers over a period of time can give you a good idea of what's going on. I like to use the US line now, and for the first time in a long time, change from the prime count is negative, minus 17. A change from last year, only plus 17. Normally those numbers on the growth side, the positives are a lot bigger. That's what we're looking for if we're more bullish. So that minus number there, something to watch out, little flag waving at us, maybe something for the bears to consider. From my experience, inventories aren't all that helpful unless you're looking for outliers, differences from the actual to the forecast for quick, sharp volatility spike in the price. Can't really gauge anything from the trend within the numbers statistically. That's proven not to work. So like I said, I'm using it for outliers and just informational purposes. It's a reasonable guide. As you see from the numbers there, forecast for this week minus 1.3 million barrels, previous 2.951 million barrels, so nothing much going on there at the moment. So let's dive into the charts and start with a longer term look. Weekly chart this is for crude oil, ticker CL1, and the takeaways at the moment, you can see the sort of indicator here giving us a more bearish short-term picture. When you say short-term, we're talking weeks here. And then the price, you can see that nice old run-up, and the blue and the red bands there, that's 2 standard deviation regression band, trying to see where it bounces within the range of that and whether it pops back in, and it does. It extended itself up here to the highs 130 around March of last year. That's when the Russian-Ukrainian crisis kicked in, and it petered around that area before pulling all the way back to the other side of the band and now edging its way through to underneath that. And some key areas, you can see these yellow shaded areas, that's a key support and bounce zone for the bulls. And I suppose also if it broke down there for the bears as well, we got 69.70 to the downside and key $82 line to the upside, Fibonacci line that is. We're talking $52 next Fibonacci line to the downside at 38.2% line. Next upside, this one here, $103. But you can see over here on the right, all that volume is in this sort of concentrated in this sort of 50 to, let's call it 75 range. So that's where I expect the action to hang around in if it does break down there. But if it can find support at these numbers, then we'll be looking, these targets on the Fibonacci and the 2 standard deviation regression bands, they're just over 100. So moving on into some sort of sentiment indicators here. We've got the volatility at the bottom. I'm looking for it to move down for the bulls and up for the bears. At the moment, it's in neutral in the cloud, so nothing much going on there. Seasonality over to the left there this time of the year, it's pretty flat. Again, not too exciting. The important one for me is the commitment of traders, large speculators, large commercials. I want to see the large commercials inverse to the price and the large speculators going with the price. And that's what we see at the moment. You can see the large speculators coming with the price on down. And you can see that range that we've talked about. And it's been going on since November of last year. And it just keeps banging to and fro. Occasionally pops down and then gets back in. At the moment it's stuck around that lower part, around $71. And then if we're looking for reversals back in, the 4-line break chart setup I've got here is a handy guide, and we've got a current bullish setup in place, 71, 72 dollars are the numbers that you want to look at for potential buy in on a longer term to the upside. Then heading into the Renko charts, shorter term and longer term view, starting with the shorter term on the left. What have we got going on? Well, we've got a bullish sign in the indicators. In the shorter term, you can see that small run up, but just starting to pull on back, maybe heading back towards $69. Takeaways, trend down, trading below its moving average, trying to just break on up. It's certainly interesting in the short term, and in the longer term, heading on to the right, you can see this range that we've talked about. This goes back to the start of 2023. It's starting to get a bit wider, actually, more of a funnel type approach, a bit more volatility picking in, maybe just reversing back at the moment. Mixed signals down the bottom, so pretty neutral there. In terms of targets, downsides, if it goes through that first Fibonacci line at 68 and a bit dollars, we've got 64, 58.5, then 55, 56, and to the upside we've got 75, and then I would think 78, 79, and then back to those highs around 82, $83. So that's the technical analysis. Let's give WTI crude oil a score. So let's put an assessment around WTI crude oil at the moment in terms of the score. Now I've gone for neutral overall. Now that doesn't mean to say there's no trading opportunities. It's neutral within that large range. Now we head up into the top right hand side. You see a lot of the indicators there are neutral: currency strength, volatility, inventories, seasonality, commitment of traders. Bearish, rig count slightly bearish, but we've got that line break number there if you're bullish, 71, 72 to get in, 71 being more aggressive. Then in the top left we have the Renko chart analysis. Short term, very mixed bag, but overall neutral, and the medium term definitely a lot more neutral, but like I said, I'm going to reiterate, in that wide range. Now in terms of targets, pretty similar to the upside, 1.93 and 3.14 to 1, and to the downside 2.86 and 3 to 1, but at the moment, like I said, neutral within that wide range. Now the two underlying factors holding the market in check at the moment, to the positive side, in the US, they're looking to make a big government buyback to replenish the stocks. I think it's about 10 million barrels in August time. They drew down heavily on the stock due to the high price around the start of the Russia-Ukraine conflict. On the flip side, the negatives, it's China. We've seen poor numbers coming out there. They're a huge player, big demand from there, not as active as they were, so neutralizing themselves out. So we got this big wide range. So if you're a range bound trader, plenty of opportunity there, and eventually we're going to get the breakout. So get those strategies ready to the up and down side. But at the moment, it's playing within that range until one of those fundamentals can break. Use a technical analysis to get yourself into the trade. Now, let me know in the comments below what you think. Love to hear your thoughts. Where do you think crude oil is heading next? Now, if you'd like to learn about the charts, technical analysis, strategy behind this video, then I've got a great free playlist on the channel. It's the ultimate free trading course. You can find that, and it's coming up right now.